no gain in the bear spreads tells you everything you need to know about this rally.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tungseth. He's Jon Prischmann.
Well, John, a 3-day weekend, and who knew you could have a turnaround Tuesday without losing on a Monday?
Yeah, it's the days I had me fooled into thinking it was a Monday, and it's definitely a Tuesday. It's already in the move. Yeah, we're on turnaround Tuesday, so what does that mean? Turnaround Wednesday? Who knows, but what a start to the week, what a start to the month. The funds were buying big time today, and it was mostly short covering. I don't want to be negative right off the bat, but again, no gains in the bear spreads weren't there at records. And we have a day up like this and we put carry in the market. That's, like I said, it's pathetic. It's not what you're looking for. One day a trend does not make, though. I mean, it's something to note. It's a divergence if you're a bull. I mean, when you have a record carry in the market, you're going to want to see them take a little bit out if it's real. Now, if it's short covering, which is what I think this is, very healthy for the market. It's overdue. You look at the chart, and it's nothing more than a blip off the bottom. And then you have the other people thinking this is the bottom, and the arguments are going to ensue from there.
I mean, you do have, as you kind of stated there, but two different philosophies, right? I mean, this is a rally, and we're going and get long, re-own your grains, right? Or just short covering, maybe I could put another hedge on.
I missed the train, during the summer, and now here's my opportunity. And, I've talked about this in the past, the carry in the market. Use that to your advantage. You look at the March contract in corn, it's 427 and a quarter, I believe, was the settlement. It wasn't too long ago, it was 407. It's come up 20 cents. And then September going off the board, even though it's in deliveries, we have that jump up in carry, which was a record, 22 cents, somewhere there between September and December. So you add that to the December contract, add it to what we just rallied here over the last few days, and you have a 40-cent rally suddenly. And that's the problem with carry markets is they have this built-in rally, and we've had a rally on top of it. So my advice is to check with your guy and look for these opportunities if you missed the first time. Other guys will completely disagree and say, hey, let's buy calls. Let's rock and roll. This thing's just getting going. Here comes $6. You know how the whole industry works. You're going to have both sides for sure. The carry tells me everything I need to know. And, and that can change. Of course, tomorrow they could take 5 cents a carry out. But it was a bad look today, in my opinion, when you're looking for like a fundamental reason for this to be moving. The spreads say no.
So let's take each side quick, though. I mean, if you believe this rally's just getting started, what would some options be? Is it options, buying? If that's what you're feeling, what are some things that you would look at?
Okay, so this is a time of year, and it's already begun, is everybody wants to protect that insurance price. They have the insurance on, and then they don't want the rally to take it all away, not sell any grains, lose their insurance, and lose that gap, and then have the market fall again. It's kind of their worst nightmare. And it's gotten to be more, I would say, of a old wives' tale than a real thing. 2020, I reference this year a lot. I wish that year never would have happened. Lots of bad habits were learned that year. And that was a year where it did take a lot of that premium away. And but it's not common. It's not actually that common. In their, a lot of people's mind, they have 40, 50, 60, 70 cents disappearing in corn. Just not common at all. There's been some 12, 13 cent rallies. And I know these numbers fairly well because I went through this a lot last year. Everybody was very worried. The market came off and I'm going to lose this huge insurance gap from where it's insured down to where the futures are. So a lot of calls on that already. And I definitely have advice for people. There's a few different ways we're approaching this, and of course, I can't say anything on there, but it's something that we're looking at. And you try to, the guy that doesn't want margin calls is going to be a strategy. The guy that wants just options, there's a few different strategies there without margin calls, and of course, combinations of everything. Is it worth it? Historically, the season will say not really. Corn generally follows beans, and it's October, not September, by the way. First week in September tends to be pretty good for grains, and it looks like it's going to be this year. But October 1st is your date for the actual seasonal bottom for grains. You normally find a bottom in August and September. One of the other, or low in August, bounce, then another low in September. That's not uncommon, or the other way around. Maybe a higher low than it was in August and September. We don't know what we're going to have here, whether the low's in or not. We don't know. Is the cash market going to handle all the heavy lifting with the storage issues that we most likely have coming up? Is it going to be the futures again? How much of the fund's covered? It's just like a soap opera. I have the answers to none of this today.
Well, let's look at the other side. Let's say this is a bounce. Like you just said, seasonally, there's a seasonal chance of a low. I don't want to say good. That's too close to saying that. But in September, there's a chance of another low or revisiting the low.
Yep.
What would you do on that side?
Oh, I have plans. Absolutely. These are the rallies that you use to better yourself. Maybe sales that you've already had. We can't get into a lot of specifics, but without a doubt, you should be looking at ideas, not necessarily doing them, but running the numbers on these rallies. I'll be on the phones all day tomorrow with the guys that are interested in that. They've been through this before. It might happen at the elevator. It might happen. It depends on the region. It depends on basis. There's no way that you can answer it, and that's, again, why I'm not a big newsletter sort of guy. You can't answer that question without talking to the guy and knowing what's going on locally. At the very least, have an idea. Whether it's the worst basis ever, then you're going to be looking maybe at more ideas on paper. If you have a good basis, it's going to be more in the cash market. So depending on where you are and what the basis is and what the outlook is in your region, that'll have an impact on which tool you should use. But these conversations should be happening. If you're not hearing anything, you're just not using the carry in the market, and you're not using the market rallies, which is exactly what you want to be looking at in a bear market. There's going to be guys still arguing to this day that it's not a bear market. And, there's not, go to the Facebook page. There's a number of, a few different ones. They're going to be convinced there's nothing out there yet again this year, or it's a conspiracy against them, and there's nothing. But the spreads say there's plenty out there, plenty in the commercial channels. Didn't see a lot of deliveries in September, it's rallied since then. But, in my opinion, we shouldn't be even talking about heavy deliveries in September. It's they got a victory there, but it's just the December is the time frame you got to be worried about what we're going to do with all these physical bushels. And then also, to further argument or cloudy the waters, you'll have guys saying that it really got dinged up last week. Again, you can't prove or disprove that, for at least 3 or 4 more weeks. So you get a lot of people talking, and you have a lot of price movement right now. But for me, it's clear as day. Work on the stuff that you talked about working on. If and when you see a rally, this has come sooner than one would have thought. It's very powerful, and it's going very fast, and it could disappear just as quick. Or, if you're the 2020 guy, it's just beginning, and you adjust your strategies that way, if that's your opinion.
Yeah. Well, between all these phone calls, between watching these prices, were there any other markets that jumped out at you today?
Well, I have my eye on the hog market. This is a spec trade without a doubt. Not so much on the hedge side, but because of what happened to hogs, the collapse spring or late spring into summer, when normally is a pretty good time for hogs. The collapse in that market, and what are we in 60s, 70s? I think the lowest contracts were in the 60s somewhere December. They might be peaking out now, and everything might have got back in the 70s. Possibly a couple of 80s in the deferreds, but it's really got my attention. I do have a spec trade that I am looking at in hogs. I'd be more than happy to talk with you on the phone with, or if you're a client, call in. But, it's like that. Every once in a while you get this trade where you just kind of lay in the weeds and you got a lot of time to think about it. We're headed into a real bad hog seasonal. It's been a bad time, but these collapses like this in markets often lead to opportunities down the road, and I definitely have one in the hogs. That's very high on my screen. Cattle's been a tough market. I like to watch it. I have to watch it every day. I have a lot of hedgers, and we do need to get some hedges on, so I've been hoping for a rally. Now, I think this, being that we're under cash and the way it's structured with that flat curve, that options are probably the better choice than futures, but I definitely have guys doing both. It's really hard to short a board when you're way under the cash price. It's not fun, not a fun market to deal with right now. You have guys on the spec side though that I follow. Some of these old floor guys that they like what they're seeing or what they're hearing out there. They had some ideas. Nothing really jumped out at me that I'm going to put my money on. But cattle has been underpriced, but it's gotten back in line with reality, which is nice to see. And then, of course, you have the guys in the sale barn saying there's still not the supply of feeders. And I think that the cattle won't be in any quick hurry to come in this year. We were just talking about corn and that how much everything there is. There's going to be an extra wheat around. There's going to be extra corn around. There's going to be extra soy meal around. When the crush is going to be rip roaring. There's going to be obviously hay everywhere. There's not a food shortage for these animals. And if we have a nice fall, like the forecast looks pretty good for September so far. I don't think that you're going to have that seasonal rush to get all your cattle in early, like we've seen for the last few years, where feed costs are really high, and the basis is really bad, and you're feeding these cattle. And last year we just didn't have a lot of rain in the United States, and you're anxious to get rid of them. It costs a lot to keep around. I don't think you're going to see any of that this year, and that might change the feeder seasonals a little bit, just hanging on to them for that little extra length of time because of all the cheap feed around.
You talked about the spreads in corn, and you mentioned with cattle that it is a flat curve right now, but I mean, this is flat. I'm not sure how many times it's happened. I didn't look up the details, but I mean, October, December, and February contracts are all at 179.
Yeah, you don't see that too often. That's a very rare deal. You're going to have October oftentimes ahead of December ahead of October this time. It's just a very seasonal thing. February generally will carry at least $1.50 to $2 premium to December, and then leading up to March.
Not a trade recommendation.
No. This is a flat curve. It's actually very rare. They had been bull spreading August, October. Where'd that go off the board? It's like $7-8. Very rare to see that. An odd structure to the cattle market, which is your first warning sign, just to kind of watch it and look for the opportunities, but nothing's jumping out at me on the spreads that I would put my money on. I am sure guys disagree with me. And then the feeders, there's probably some opportunities there, but the spreads have gotten really wild in feeders over the last decade. They used to be a really consistent deal, even though they're a little thinner, a bigger contract than live cattle. But wild, they're all over the place, and the funds putting money in and out in that thin market like that really skews that stuff. But it does create opportunities. I don't like the structure, so I'm just watching it right now.
So the last time we had a significant red day in the equity markets, we did see a bounce in soybeans there. Today wasn't nearly what we saw at the start of August, I think that was, but we did have the Dow down 500 points or so today.
Yep.
And we see soybeans up. Could that be fun moves there that you're seeing?
Yes, that's exactly what that looked like. It looked like money shifting around in very significant ways today. You had the metal markets. Platinum, I think, was down 3%. That's you know what? We already kind of went over the stuff that's jumped out at me. Platinum is a market I really, really, really like. And anybody that's out there listening that's a platinum fan, which are few and far between, but if you're a gold and silver plan, you will be a platinum fan. You just need to talk to me. That's a market that I do watch on a daily basis, and I have a number of guys that I've gotten interested in. It's an interesting metal. I mean, it's a 50-ounce contract, and the reason why it was smaller than the gold contract was because it was always carrying a premium to gold. It's been years and years since that's been the case. As a matter of fact, it's less than half the price, oftentimes, than gold now. But what comes around goes around. It's not free to mine platinum either. So there's levels I look at in platinum that I really like. I'm more of a tape reader, but platinum for me is a levels market. It's closely tied to the stock market though, and that's why you're going to see platinum leading on a way down like today. Catalytic converters, cars, think sales, and electronics. It's in everything, and it tends to be on days like today not a precious metal and more of a commodity that less people are going to use when the Dow is down 500. So commodities kind of have the curse of they follow that stock market down really fast, but then now if the Dow bounces tomorrow, that's not maybe what you see with platinum or the cattle market. It likes to follow it down. It doesn't like to follow it up. And it's very similar to the natural gas market. Attaches itself to the hip with fertilizer prices when natural gas is cruising up. Boy, it falls apart. Goes to $1.90 like we just saw recently. What are you talking about? That has nothing to do with fertilizer prices. That's crazy talk. So you see a lot of that in commodities, and you did see that in the Dow today. To me, it looked like people had a lot of time to think about what they were going to do over their 3-day weekend, and they probably took off some more time. The big traders I'm talking about, more time than that. And they definitely had a plan today, and it sure looked like they put it. It was going to happen. I don't think the market created it today. The outside markets, including oil, really got hammered, and that had to do with OPEC as well. The metals, where you saw the markets that were heavily short grains, that covered a substantial amount of positions. To me, it was clear as day that there was planned money moving around here after thinking about it after a long weekend or probably even more time off than that. Very distinctive, kind of a black and white look in the markets today.
That was a market that I did not have on my notes for today, but crude oil was down, 3% also, off $3 or so?
Always fun to watch crude oil. This gets everybody's attention, and it gets to be a little political, but really crude oil is the lifeblood of everything in the U.S., from all the plastic everything to everything that's including manufacturing and transportation. So it's going to be the first place where weakness shows up in the economy is going to be the crude oil market. A lot of people tend to forget that, but in 2008 it led the way down well before everything else started collapsing. So definitely something to watch. Without a doubt is these declining crude prices. You're going to want to watch the demand side of stuff versus production and try to figure that out.
Yeah, it's always hard to judge that, though, because it's the market, right? So OPEC did have a trial balloon on Friday, I think, of maybe they were going to increase output, and the market reacted bad to that, bounced back up, and so you got to look at the news too, right?
I'm going to guess OPEC has a favorite in our presidential race, and I'll leave politics out of it, but I'll let you think about that, and they're going to want one over the other in there, and that might have something to do with it, but of course that's crazy talk.
Don't be a conspiracy theorist, John.
Yeah, no, I got that on my license plate. I want everybody to know. No, there's probably when you're in the production business and you have competitors, you're probably cheering for one over the other, and there's two different philosophies when it comes to energy, for the people up for election. So that probably has to do with it again. The spigots are wide open for OPEC here in the short run, and oil prices are declining.
Shocking.
Is it?
You said a few episodes back that you don't want to bring politics into it, but sadly a lot of what we do trade is affected by politics right now, and especially in an election.
Yeah, I lose this battle every time. Unfortunately, it is. It's just front and center, and we'll just talk about stuff that affects it, and we'll keep it at that. I mean, there's really nothing else to say. It's all WWF wrestling, anyways. Good guys, bad guys, but it is affecting the prices, and then we'll bring it up when it does. It's affected it recently, price gouging and that kind of stuff. Of course, the producers got hit there, not the actual bad guys that are making a bunch of money in the middle. But, it's unfortunately, everybody's running on it. I'm looking forward to November, so hopefully we don't have to talk about it anymore.
Right.
But it might just be getting started, too.
Well, sadly, I'm sure for the next couple months, it is just getting started in the way it affects markets. And I agree with you that we're not a political show. We don't need to debate our opinions or what we think, but we do need to be aware we are a hedging show, and we need to talk about how
whatever gives you an edge.
That can affect.
As a matter of fact, politics often makes people lose money in the markets. They choose teams and they trade that way. That's not a good combination at all. So you don't want to involve it if you can help it. It probably will help your trading a lot.
Yes. Yeah. Well, let's go trading philosophy again for a few minutes, but often if you let your preconceived notions influence where you think a market should be, you're going to lose.
That just happens on a daily basis with me in the stock market. And I know better. All you have to do is just buy it. It's like magic, but I just can't do it.
Not a trade recommendation.
So I'm guilty of it all the time. But then I get out and wake up and don't do it for a while. Burns my hand, but I get right back in there though.
Yeah, there's a chance my account changed in value over the last week because of
see the Dow's down 500.
I
told everybody, and tomorrow when it's up 600, I'll never bring it up again.
Exactly. Yeah, except for how negative it affected your account.
Yeah, head to the banks, get the money. The run's happening. Get the shovel. We gotta dig up the gold. No, you always think it's going to happen in your life. All these things that people talk about with the metal markets and all that, it is slowly happening. I've been sitting on $34 physical silver for quite a while. Not a lot of $34 silver, but at the time it was the hottest trade ever in 2008. And look at what year we are now. 16 years later, I'm almost even on that stuff.
Yeah, hey, way to go! I mean, inflation hasn't changed or anything in the last.
It looked like the
16
right
years, has it?
Yeah, and that shows you how quick commodities can change. At the time, oil was 150 cruise, and the dollar was collapsing. I think it was 87. We were going bankrupt, and it just looked like the best idea ever. And then snap your fingers, all the commodities went to near zero. I mean, really quick. And that's you just have to get used to that in commodities. It can seem like this inflation is going to last forever. But it can end real quick as well. But what I don't like is that price wage spiral we got going. You gotta pay somebody to come in to work for you, and it goes up every day it seems. And then of course you got to charge more. That's a bad combination. That's what we're seeing right now. And then we have a lot in the interest rate. We'll probably talk about that next time. We have so much to talk about on the interest rate side of stuff, and what that could mean for business, housing, farms, everything. It's going to be big this year.
I did just listen to another podcast, someone slightly more famous than us. It was Joe Rogan's.
Oh, I think we're tied with him.
Yeah, close, I think, anyway.
Yeah, 1-2, back and forth.
Yeah, trade it back and forth.
What's he say?
Well, he was talking with Peter Thiel, and he mentioned that they were talking about moving a business out of California. And Peter Thiel was talking about how hard, like the reality of actually doing that, especially in today's interest rate, housing price market, to try and move your entire company to anywhere else now versus even 4 years ago with interest rates, with housing prices, with all those things. And
just think all the fishing equipment I'd have to move out of here if I moved out of my office.
Oh my gosh.
A lot. It would take 2 trucks. So I can't even imagine.
2 semi-trucks.
I can't imagine
2 pickup trucks.
It's all treasures, though.
Yes, man.
But no, it's a big start to the week. For me, I see opportunity, even if you're on the wrong side, but still, it's an opportunity, for maybe, like I say, you missed the hedge train on the first time, or if you're in the other camp, there's strategies that you can look at there too. That's low risk and it maybe doesn't have the margin calls. I mean, there's definitely a lot of option stuff. That's the good news. These markets got real bearish and everything's really cheap in the option side of stuff. So I expect a very busy week this week.
It'll be interesting to watch. I would say, from a volatility side too, it was bearish, but it wasn't volatile. Right, so that affects that option.
Very smooth. That's why I think it looked very planned. It had a real smooth look to it on both sides. They not like a lot of jagged indecision. The outsides were decidedly weaker, and then the grains, where they're heavily short, were up. On what looked to be a lot of profit taking, short covering.
Yeah, that's That's certainly what jumped out at me today.
Yes.
was that shift in market. You had hogs. I'll say the orderly flow of money was very interesting to watch throughout the day.
Yeah, and then when the Dow has sold off lately, it's been pretty orderly all day long, like almost pre-programmed selling at certain levels throughout the day, not to make it crash. But no, I'm off to mow the lawn for about the 85th time this summer. And if you don't, then it gets so long that it makes it even worse.
Then you have to mow it twice, which I had to do last week because I was out of town.
Ours was getting so bad that that didn't even work. The belt started slipping on a nice John Deere mower. Yeah, so cooler weather's on the way. No frost in the forecast that I saw, and it's time to mow the lawn, hopefully for the last time in a long time. But I'm probably not. On
the plus side, though, the kids are back in school, so we have our days back.
Yes, I enjoy this time.
Are you back to an empty nester yet?
Till about 4:00, and then everybody comes home again.
Sure.
That's exciting. That was exciting. Even though it sounded like I was talking, that was exciting for the record.
That's John's excited. You might be able to go fishing during the day for once.
Oh, fishing's a big part of these plans, but I'm going to wait for him to get a little more bitey here in 2 weeks, I think.
Yeah, well, we could use some cooling temps, I guess. We can head into fall.
I have a feeling we're going to have a lot to talk about here next week.
Looking forward to it. Why don't you let everyone know how to get a hold of you?
Yeah, see, if you want to know what I'm doing on the hedge side of stuff, on both sides, by the way, give me a call at 218-731-1578.
Thanks, John.
Yep. That automated trading is so funny. It's like they think AI has changed everything. It's been around since the dawn of time.